Welcome, curious minds, to another deep dive. Ever look at the financial news, the headlines flying around, and just wonder what's really going on behind those numbers?
That complex dance.
Exactly. So today we're going to pull back the curtain a bit on market analysis. We're specifically dissecting the Nifty market for July 25, 2025.
And we've got quite a bit to unpack. Gift Nifty, futures, options strategies.
Yeah, all stack of insights. Our mission really is to cut through the jargon, find those key nuggets so you walk away feeling, genuinely clued in on how these systems work.
Let's do it.
Okay, let's unpack this. So first up, let's set the stage. We're kicking things off with a snapshot from the Gift Nifty, used to be the SGS Nifty, right?
That's the one. This is data from early morning, 2:27 a.m. IST on the 25th.
Right, and the current price we're seeing is 24,968.00. Now, how does that stack up against the previous close? That was 25,086.50 full.
So you can see the difference there. It's down 118.5 points.
Which is what, about minus 0.47%?
Yep, just under 0.5% drop.
So what's this initial dip telling us? What's the suggestion for the market open?
Well, these early numbers, they're kind of like the market's first whisper, before the official Nifty slot market even opens. And that negative change, that nearly 120 points down, it immediately signals a likely gap down opening for Nifty spot.
Gap down, so it opens lower than it closed.
Exactly. It sort of jumps lower, skipping over prices. We're probably looking at an opening somewhere in the, say, 24,970 to 25,000 range.
Okay, so that sets a pretty cautious, maybe even bearish tone right from the start.
It definitely does.
Okay, so a likely gap down, painting that bearish picture. But what about the trend, like leading up to this snapshot?
Good question. So looking back, the sources point to a steady decline throughout the session with no recovery attempts.
Ooh, steady decline, no recovery attempts. That sounds pretty one-sided.
It really is. And while, markets can always surprise you, that kind of pattern, it's a strong indicator of, well, deep-seated bearish sentiment.
Meaning sellers are just pushing it down.
Pretty much. When you see prices consistently moving lower, no real bounces, no rallies attempted, it suggests sellers are firmly in control.
Right.
And this could be driven by a couple of things, maybe negative global cues, stuff happening elsewhere, or it could be significant institutional profit booking. Big players selling off.
Locking in gains.
Exactly. But the key takeaway is that absence of bullish pushback. It's a sustained retreat, really.
Okay, this is where it gets maybe a bit more complex, but really interesting. Futures data.
Ah, yes, the futures market.
Yeah.
Often gives a good read.
So we're looking at Nifty futures, specifically for the July 31, 2025 expiry. The price there is $25,082. That's down even more, 170.8 points, or minus 0.68%.
A bit steeper than the Gift Nifty indication.
And then we have open interest OI stands at 1.29 crore contracts. Volume is 47.4 lakh. But here's the kicker. 0% change in OI. What does that mean? My head's starting to spin a little.
Yeah, let's break that down. So futures data is often seen as a leading indicator, right? It gives that forward view.
Okay.
And open interest, OI, think of it like a running count of all the active open bets in the market, how much money is really committed.
Gotcha. Total contracts outstanding.
Exactly. Now, that 0% change in OI, especially with decent volume like 47.4 lakh, that's quite telling.
How so?
It suggests no fresh buildup yet. People aren't rushing to open new positions, either bullish or bearish.
So they're holding steady.
Pretty much. Those existing 1.29 core contracts, they're largely being held. It implies, a holding pattern. Participants are kind of standing pat, maybe waiting for more clarity or a trigger.
Interesting, like a calm before a potential storm or just uncertainty.
Could be either, really. They're waiting to see what unfolds.
Okay, so let's try and connect some more dots then. We have other indicators from previous OI analysis. Max pain at 25,100.
Right.
Then there's heavy put writing at 25,000 to 25,050.
Crucial levels.
And finally, the PCR put-call ratio at 0.69, which is flagged as a bearish bias. So how do we weave these together with that holding pattern in futures?
Okay, good. Let's piece it together. So max pain, right? It's this interesting options concept. Basically, it's the strike price where the most options contracts would expire worthless.
Meaning minimal pain for the option sellers.
Exactly. So a max pain at 25,100 suggests option sellers are kind of betting the Nifty might hover around there by expiry. It's like a magnet.
Okay.
Now, that heavy put writing at 25,000 and 25,050, that's really important when people write or sell puts.
They're betting the price won't fall below that level.
Precisely. So seeing heavy writing there means significant money expects the price to stay above 25,000 and 25,050. These act as potential support levels. It's where the big players have drawn their line in the sand, so to speak.
Ah, okay. Potential floor areas.
Definitely. And then the PCR, the put-call ratio. Think of it as the market's internal mood ring.
Aha.
A PCR of 0.69 being below 1 means more puts are being traded relative to calls. Or maybe more calls are being sold. Either way, it points to that bearish sentiment we've been seeing. More bets on a fall, or at least not a rise. So you combine the max pain, around 25,100, the strong put support lower down, the bearish PCR, and that gift nifty gap down signal.
Huh.
It all reinforces that bearish outlook, but with specific levels to watch as potential support.
Okay, that makes a lot of sense. So for someone looking at all this data, what's the recommended bias then? The sources say bearish to range-bound. What does that mean in practical terms for July 25th? Like, what's the play?
Yeah, bearish to range-bound means the expectation is either further downside or trading sideways within a lower range, not expecting big rallies.
Right.
So the recommendations get specific based on where Nifty actually opens. If it opens below 25,000, the clear bearish case. The action suggested is buy 24,950 PE, that's a put option, betting on a further fall or short Nifty futures, again betting on a drop, but with a stop loss just above 25,050 to manage risk.
Okay, betting on more downside. What if it opens slightly higher, like around 25,000 to 25,050?
That's seen as neutral to weak bounce. The advice there is cautious. Avoid aggressive longs. Basically, don't pile into buying calls or futures hoping for a big surge.
Because the overall sentiment is weak.
Exactly. Instead, the recommendation is to watch for rejection at 25,050, 25,100. See if the price tries to go up but fails at those levels. That could be another shorting opportunity.
And the less likely scenario, opening above 25,100.
Yeah, marked as reversal watch. If that happens, you might consider a 25,100 CE a call option, betting on a rise, but only if the price stays above 25,120 and shows strong volume. It needs clear confirmation.
It's very conditional.
Very conditional. And just to put some hard numbers on it, key support levels are seen at 24,950, then 24,880, then 24,800. Resistance is at 24,100 and 25,150.
And that note, break below 24,950 may trigger more downside. That seems like a key level.
Absolutely. That's the first major line of defense based on that put writing.
Got it. Okay, finally, let's touch on the risk notes. Always got to talk about risk, right?
Always. Crucial context.
So we see low VIX, 10.72, may result in slower but steady moves, not sharp reversals. And the classic reminder, avoid over-leveraging on expiry week or ahead of major news. Why highlight these?
Well, the VIX, the volatility index, right? It's often called the market's fear gauge.
Uh-huh.
A low VIX, like 10.72, suggests the market isn't expecting huge, wild swings. Think calmer waters. So if the market does move down, it might be a slower, steadier grind rather than a sudden crash. Don't expect dramatic snapback rallies either.
More of a slow drift, perhaps?
Could be. Steady moves. And that second point about avoiding over-leveraging, especially during expiry week or before big news,
Yeah.
that's just fundamental risk management.
Yeah.
Expiry week can get weird with options dynamics. Major news could just flip sentiment instantly. So it's a reminder. Manage your position size. Don't bet the farm, no matter how convinced you are by the indicators.
Solid advice. Always. Okay, and there we have it. A pretty comprehensive deep dive into the Nifty market analysis for July 25, 2025.
We covered quite a bit.
Yeah, we saw how that bearish sentiment is kind of projected through various indicators, from GIF Nifty to futures and options, and how specific levels and recommendations emerge from that data. Hopefully you now have a better grasp on how analysts interpret all this complex stuff.
You know, what's really interesting here, I think, is seeing how all these different pieces, current price, futures OI, option writing, VIX, how they all kind of converge to tell a story.
Yeah, it's like putting together a puzzle.
Exactly. It's not just about the bearish call for tomorrow, but how that conclusion is reached, how these seemingly separate data points create this collective whisper about where things might be headed. And that kind of brings up a bigger question, maybe something for you listening to think about. In this world just flooded with information, how does taking the time to meticulously dissect specific data points, like we just did, actually empower you? How does it help you understand the bigger economic stories playing out and maybe make more informed decisions, not just in markets, but in general?
That's a great thought to end on, something to definitely ponder.